Welcome back to the weekly recap of Gbpcad. For the second week of September, we're going to be going over what happened. Essentially, what I had in the analysis, this is where we were before market open. I said that once we break this market structure here, we're going to continue down to this low, okay? And then we're going to watch and see what price reacts to. And if that low breaks, then we will continue down to this structure level here, right? These are all just market structured levels. Like you see, price, once it broke here, retested right there and continued up to here. So we knew this is clean traffic. Once this breaks, we're going to continue down to here. Exactly what happens, okay? And then once this breaks, we're going to continue down to this daily level right here. Boom, we reached it, right? And once that breaks, then we had... So this level was from here, these candle bodies, right? And then this level here is because of here, these two candle bodies here, okay? So essentially, that's also weekly level, right? And then we did reach there. So let's go into lower time frames and dissect the exact moves and the levels that we saw happen, okay? So pretty easy downtrend in intraday, right? If intraday price action continued, we'd go down. So 15 minute, we'll look at 15 minute. This right here is September 7th. September 7th, first London session of the week. So this move right there was a liquidity grab, right? Price went, created a lower high. This was the previous lower high, created that lower high. As soon as price broke below, you knew that lower high was complete, and that now price is going to continue down to the next zone because we're creating lower highs and lower lows. So that's 65 pips right there from level to level. You could have entered as soon as price broke back below this level in 1 minute watching. 15 pips stop loss, I say above the previous 15-minute candle. 65 pips, 1 to 4 risk reward ratio, okay? That would have gone hit by 6:15 a.m., which is 3 hours 15 minutes after London open, okay? So now we got that 60 pips. Now let's look what happened in our hourly time frame. We break past below this market structure, the previous low, which is the low that we talked about, right? A daily low. So daily almost broke below it, didn't quite break below it, but you see 1 hour candle still closing below here from September 7th, 8 a.m. to New York open till September 8th, London, we were closing below it. So let's check. Next day, okay, September 8th, price pulls up exactly to this level that we have, exactly to the reaction, and actively reacted to it and gave us a perfect sniper entry. Perfect entry, created a lower high, right? 100 pips right down to the next level. 15 pip stop loss above this wick over here. But you see how nice that looked on the hour chart, how it's just a retest of the level, continue down, grab liquidity. Essentially that move up was a liquidity grab. 4 hour, very nice 4 hour now at this level, right? So this move up was the liquidity grab. We grabbed liquidity at this. So liquidity is waiting at these levels. You know price is going to come here. All you need to know is where liquidity is sitting on the charts, where there's a lot of orders sitting, and it's always at these key levels. Okay, so continue down 100 pips, right? Now we exit. You can hold the runner, but, secured, okay? Next day, this is on the 9th. I personally didn't like this, but you can still see that price, when it broke below, actively reacted to this level here, and then continue down, create a new low, right? So when something like this is happening, consolidation, it's just gonna impulsively drop, right? So even if you want to count this, I personally didn't like this one, but that was still 90 pips, let's say, right? 90 pips, 15 pip stop loss, wouldn't have gone hit. So once it broke back below, let's check that out in 5 minutes. Yeah, you see, once it broke back below, you're still making lower highs, lower highs, lower highs, lower highs, and then you made the new lower low. Okay? So that's that. And then, so now, 4 hour has officially broken below this market structure, right? We reached it on September 8th. And then now that we've broken back below this, the next level we're looking at is right here. Right. So what are we waiting for again? In London, liquidity grabs, right? Liquidity grabs and watching price as it actively reacts to these levels. I have mentioned this in every single video this week that we're watching for active reaction to these levels. Excuse me. And so you see, price pulled up, did a liquidity. So this is prior to what was happening was consolidation, and Asian and pre-London was consolidation, right? Previously pulled up, rejected level, came down, consolidating. Okay, so now we're looking for, okay, we're not going to take a sell here. No, we're not going to take a sell there. We're not going to take a sell here. We're going to take a sell when it's actively at this level. Pulled up 5 a.m., 2 hours after London Open. If it didn't pull up London Open, who cares? Price isn't at our level. So remember when I said price, when there's for a move to start, there has to be a certain price that has to be met. And in this case, it was this level here. In this case, it was this level here. Okay, so price came here, consolidated on 15-minute, broke below, and basically this was just liquidity grab, right? This was a liquidity grab, and then the actual move started. So take an entry here, and then your target, first target can easily be this low right here. You see we broke the low, retested, continued down, or you can, because we're so confident in these levels, price traveling level to level, you can easily have a take profit to the next level, right? And on 4 hour, that was just beautiful. 4 hour candle retested and right away dropped down to our next target. You went on hourly chart, you see this is essentially a lower high. This was the previous lower high, new previous lower low, and then we created a new lower low down here after reaching this area. So we reached this level, right? Perfect. Can hold a runner or secure. If you hold a runner, in this case, it would have been nice to hold a runner. 280 pips, right? You would have got an extra 140 pips. Besides that, that was Thursday, and then we see price just consolidating. We see price consolidating right at this level, okay? Sorry, throat's a little dry. So, price consolidating, and our next level to reach is, after we broke this, our next level to reach was down here, which is the weekly level. Weekly candle bodies closing here, right? Price activity around this area as well. So once we broke that, we're like, okay, price is going to go back down. It has to reach down before, okay? So consolidation, price consolidating right here. Not the best setup, but you can still see that. Remember I said in the Gbpcad video that there's no reason to take entries in the middle of consolidation, right? That doesn't amount to anything, right? Even here, it's best to take entries at higher time frame key levels when price is actively reacting to them, or at the top of consolidation when you know that the move is a continuation, right? We're only consolidating to continue. So 2:30, 3 a.m. price pulls up, grabs liquidity at this level, same level here, right? Top of the consolidation, right? This is top of the consolidation. Grab liquidity, and then we continue our move down. So that itself was, we can just say 90 pips, okay? 90 pips, 15 pip stop loss like always on Gbpcad, no less. 15 pip works like 95% of the time. I back tested this as well. 90 pips here, didn't reach that level exactly. We were like 15 pips away from it, but close enough, right? So you reach that level after here, right? So entry from the top of consolidation, and 4 hour, as you can see, was just breaking levels, continued down to the next level, broke this level, came down here. So sorry, broke this, continued down here, targeted this. We broke this, retested right there, continued down to our next level, which was here, came here, right? Broke this, retested, and continued down to this level, target, and then once we broke this, we didn't get a full retest as we were expecting, but it was just consolidating to continue consolidation, top of the consolidation, continue down to the bottom level, right? So very simple, just following price action, following market structure, getting in when price is actively reacting to these levels, right? Otherwise we stay out, or when it's consolidating for continuation, and then you can just act accordingly and enter at the top of consolidation or bottom of consolidation if it's going up. But yeah, reached our weekly low right there, and now we're just gonna have to wait and see what price does. But yeah, quick Gbpcad breakdown. So let's just go over how many pips that was. 65, 104, that's 170, 170, 90, 360, sorry, 260, right? 260, 150, so 410, and then 88. 260 is plus 140 plus 90. Sorry, equal sign. 490 pips on Gbpcad, and that's not counting the entire move, which was the entirety of it was 505. You could have still caught a nice 400 pips, right? And that's excluding the runners. I'm just talking about level to level immediate moves that happened during the times that we were actively trading. Okay, this was in New York, so still pushed down, but yeah, runners would have been worth it over there, but I'm just measuring moves from price level to price level. Okay, 490 pips, Gbpcad. You see how clean it is, straight downtrend. We called this as soon as this level would break, we'd first reach here, watch for break here, okay, and then just watch levels as they come. I said that in last week's analysis. But yeah, thanks for watching another Gbpcad weekly recap of the second week of September, and I'll be uploading the analysis soon.